Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Megan Brantley, VP of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, so we're talking Kroger. You know, when we asked you guys to look at data on this one, I was surprised that the rally that we saw in 2024 hit all-time highs just last month, above $66 a share. It seems like everything's going good for this company. It almost followed that trajectory that Walmart's had as far as moves in the stock to all-time highs. But now we got earnings tomorrow morning. Do you guys have the data that supports the moves that we've seen in Kroger?
You know, whenever we look at Kroger, this is a monster, right? It has a lot of other names underneath its banner besides just Kroger, King Soopers, Harris Teeters, Ralph's. And so when we look at this and we aggregate this, we see two big pillars of strength for Kroger. First is its digital environment, its digital sales. When we look at Kroger versus peers, we see it performing really well. We see those web visits continuing to grow. And I know that this was really important last quarter. I think digital sales grew by about 11% on a year-over-year basis. And our data suggests that this pace is set to continue. I think that this chart is interesting also because this to us is a nice forward-looking indicator of where consumers are looking to find value. And so I think it's interesting that you see consumers who are looking for perhaps that lower price point when you see Dollar General, Kroger, and Walmart up at the top of this list. And one of the things that Kroger's been able to do is expand its private label offerings, those owned brands, and those come at a higher margin for Kroger, but also a lower cost for consumers. And so I think that there are a couple of things, you know, if we look at the key indicators for us, things look pretty nice for Kroger. It looks like it's probably priced about right. But I think that, as you mentioned, the stock has had really nice momentum over the last year. So the bar is very, very high. And we have kind of this increased uncertainty that's being introduced for Kroger, partially due to the CEO transition that was a bit unexpected, and also this uncertainty related to the health of the consumers, how tariffs and inflation will impact consumer spending. And so I think that we've got a bit of a double-edged sword heading into this earnings event.
Yeah, Megan, this stock has had a great last 12 months, up 27%. And the expectations, you know, they've outperformed the consumer staples segment of the S&P 500 by 2.3 times the other names. So they've done extremely well. Now you can make a case it was lagging for a little while, but it certainly made up a lot of room. But their fourth quarter revenues are supposed to be lower than the third quarter. So if there's any, you're right, this stock has got a high bar going in the earnings, and they've got a little event going on with the changing of their CEO. So I think how they explain this, the numbers they put out, how they guide, which has become such an important part of earnings this season, will dictate what this stock does. But your data, Megan, is actually, it follows up or confirms some of the movement in the stock. It's fairly strong and resilient, isn't it?
It is. You know, whenever we generate just a raw earnings score, if you take out some of those uncertainty metrics that I mentioned, our earnings score is pretty positive. It comes in at a 31. But I think that you do have to kind of scale back and look and say there's a lot of uncertainty at play. There could be some fear at play. We've seen a lot of names get punished for guidance that doesn't quite hit the mark, or any sign of fear related to tariffs or related to inflation and consumer sentiment. And so for us, you know, we're starting to see a consumer get definitely more selective in terms of finding that value. So far, it does look like Kroger is one of those winners where a consumer is able to find that value, to be able to find perhaps those lower prices. I think that this lean into its owned brand, its private label brands, is certainly helping. We see a pretty significant uptick if you look at those searches starting even last November and carrying through this year. And so I think there are reasons to be optimistic about Kroger. This is a company that's performing really, really well long term, but there's a bit of caution heading into this event just because we don't know how commentary will be with that leadership change, and we don't know how Kroger will approach just this uncertainty right now in the environment that we're in.
Megan, we've seen the data recently, consumer confidence, consumer sentiment waning. We saw the reports out of Walmart, out of Target, where there have good reports. Walmart, the bar was high, probably just like Kroger. But now you're starting to see some of that guidance really start to show cracks where the consumer's pulling back. They've lowered guidance in the current quarter for the fiscal year, some of these other retailers. Is that an outlier here, or do you guys have any other data that's also reflecting that? Any other retailer names that you guys cover where, hey, the consumer is pulling back and it's going to be rough maybe for a quarter or two?
I think that for us, one of the sentiment or one of the indicators that we like to look at is sentiment. And one thing I will say about Kroger is it does have a high level of consumer sentiment. So consumers perceive this experience as a higher quality shopping experience versus, say, a Walmart. I think that it's helped that Kroger has also leaned into delivery and leaned into, just digital shopping and pickup and things like that, because consumers really want that convenience. But when you look in store, consumers and at Kroger who are shopping are reporting a better experience. They're able to find more, and they do like the quality of the items that they're getting. They like that there are pricing options that fall within their budget. So it's tough. As I mentioned, all of our indicators and our metrics, when we look at this from a consumer perspective, we see, especially that higher earning consumer is going to perform well for Kroger. But I think that there's a bit of a divide that we're watching where the lower income consumers are really struggling and really looking for that value. And so that could introduce some uncertainty in regard to guidance. But at large at Kroger, we do think that this is one of the best of breed in this space, but certainly facing a high bar. If you look at it, if they kind of trade down to their private label, that's good for them as far as margins goes, even if they do see a pullback in spending. But you got to have groceries. All right, great stuff. Great data as always, Megan. Appreciate it. Thanks, guys.
All right, that's Megan Brantley, VP of Research at LikeFolio. Kev, and that she brings up a good point. This might be like one of those safety plays in the overall